The staying power of this move, as the market bets the Fed's next action is a cut in interest rates. No more hikes. Let's ask Professor Jeremy Siegel. He joins us once again. Professor, good to see you. I guess you have reason to be smiling. What do you make of this move in the market, and where can we go from here?
Well, Scott, I like it. I had said that November is one of the very best months of the year. It's certainly proving to be great news on inflation. What I would say is that Jay Powell has to be on the lookout. We are slowing. I'm not saying we're going into recession at all, but he has to be as sensitive to the real data going down, as he claims he's so hypersensitive to that inflation data. I really think the next move is going to be a cut, even if there isn't a recession, just because of the slowdown. It could come as early, actually, as March of next year. I want him to uninvert this curve. That has, as we all been saying for months, has never been a good sign through history. We want to get that short rate below the long rate, and Powell can do that.
Are you saying that it's all clear on the inflation front, that the bear case is in fact now dead?
I would say it's all. I would say it's all clear on the inflation front. And by the way, my biggest worry is Powell's going to bring up that argument about the 1970s again. Oh, stop-go policy. Burns lowered the rate, and all of a sudden inflation zoomed up again. We are in a totally different situation now. Back in the 1970s, we were just pumping money in every single month out of the year. We have had no money growth, Scott, for 2 years. We've had no deposit growth, and this is as long as we've kept records on commercial banks for 3 years. So liquidity is being squeezed. We are not going to have any more inflation. Sure, certain core rates will go down slowly, but that's not the battle that he has to worry about in the future.
I mean, there are others who say that's not so true and not so fast, right? Jamie Dimon, professor, says, quote, people are overreacting to these short-term numbers, and they should stop doing that the Fed is right to pause for now, but that they might have to do a little bit more. He's not so convinced that inflation is going to go away as quickly as you believe.
Well, as I said, there'll still be elements of core inflation, but if he waits till all that elements of core inflation go to 2%, I think we could have a recession. I rather take a percent here, a little slower, and keep the economy out of a recession. I think that's what the American public will like to do. And as Scott, as we've talked about, we are in election year. What does the worst thing that can happen is unemployment suddenly comes up to 4.5%, 5%, and buys us maybe 6 months earlier, we're going to get down to 2.5% inflation. I don't think that's the trade-off American public wants. Certainly not the trade-off that the administration wants or the politician wants. So my feeling is that he'll move easier on that, and he has to be really sensitive to any real slowdown that could still plummet into a recession. I'm not saying that, but I would say there's more risk on the downside now than on the upside.